Good morning, good afternoon, wherever you are in the world, and welcome to today's webinar. My name is Sally Fletcher. I'm the Head of Thought Leadership at Hypatus, and I'm delighted to be hosting this session today. So today we are talking about closing the AP automation gap with Agentic AI. And before I delve into the topic and introduce our speakers, just a little bit of housekeeping for you. There is a chat function and a Q&A function on the right-hand side. Our speakers are here live, so let's make the most of that and make the session as interactive as possible. Make sure you get your questions, your comments into the chat function and the Q&A. We can take questions throughout, but we also have time at the end reserved. So please do pop them in. There's also, this session will be recorded, so don't worry too much about making notes, taking screenshots. We'll record it and we'll send you that post webinar. What else? So let me tell you a little bit. Oh, polling. I'm going to launch our first poll. We want to make sure the webinar is designed with you guys in mind, your maturity, your challenges. So we have a couple of polls throughout the session. So I'm going to put the first one here. And we'd love to know, what is your current level of AP automation? So if you just click on there and let us know, that would be great. Brilliant. Okay, so I'm going to introduce our speakers now. So first up, we have Vasilios Mitropoulos. He is a Senior Manager for Treasury and Finance at EY. Vasilios is an experienced consultant with extensive experience in helping clients identify and implement solutions that enhance process automation and efficiency across the finance domain. He's a Senior Manager at EY Greece, based in the Athens office, where he tells me it is a nice summer. 34 degrees, but a nice summer.
Exactly.
Yeah, he's focusing on finance transformation services, providing advice in streamlining finance operations and improving financial decision making.
Good morning.
Good morning. And he will be joined by my colleague, Anastasia Fedorova, Partner Account Manager at Hypatus. Anastasia leads the global partnership with EY, driving joint go-to-market and delivery initiatives around AI-powered finance automation. Before joining Hypatus, Anastasia was a transformation manager at Core SE in Berlin, advising clients on large-scale digital transformations. So two very well-qualified people to talk to us about AP automation. So I'm going to have a look at the poll. Hello. And we have quite a mixed bag in here, 21 to 50%. Oh, up, yeah. Okay, tied with just below 0 to 20%. So I feel like you guys are being very honest in your assessment of your AP automation, because sometimes we see kind of people putting 75 plus, 100% plus, and it's really down to actually the invoice ingestion as opposed to the AP automation, which is a difference that is important and we're going to talk about today. So let me go ahead and share my screen. Always the most tricky part of any webinar. And let me know that you guys can see that, Anastasia.
Yes.
Perfect.
Yes.
Okay, so our agenda for today, we're going to be spending around 45 minutes, 50 minutes with you guys, depending on our questions at the end. But we're going to look a little bit at benchmarking. Where do we sit now? Balancing efficiency with human in the loop. So what level of human in the loop, human on the loop, human off the loop should you be looking for? Agentic AI in AP, so some applications, some use cases that we've been working on. And then crucially, overcoming barriers such as data quality, integration, governance, and cost. So if you're kind of thinking agentic AI sounds great, but you're not quite sure how to get there, we'll be kind of looking at that. And then some takeaways and some Q&A at the end. Okay. So I hope you can still let me know if my screen goes off. Okay, perfectly. So SSON's State of the Industry Report, Shared Service and Outsourcing Network, for 2026 came out last month, and it revealed that even though we're still more than a decade into AP automation using things like RPA and OCR, Most of the market still considers itself medium levels of automation, which they define as between 25 to 50%. So if you mark that on the poll, you're in the majority. Roughly 30% describe themselves as low level. And I found that really surprising because shared service leaders always place a huge importance on leveraging digital solutions as a way to achieve their objectives of going from cost to value adding center. We all know the benefits of AP automation are well documented: increased productivity, better compliance, fewer errors, better access to dynamic discounting, data analytics, and the list goes on and on. So why haven't we got to that end-to-end AP automation yet? What also complicates the issue, and I referred to that earlier, is the fact that many AP leaders confuse invoice ingestion and capture with end-to-end AP automation. So while kind of basic invoice ingestion will be helpful, the real ROI, the real reduction in manual work, exception handling, the strategic benefits come when you automate beyond just invoice intake to the workflow. And that's where agentic AI can really, really help. So we're going to talk a bit about that now, and I'll dive right into it. Vasilius, let's start with you. Welcome to the webinar. How do you tell if someone's AP is truly automated, and what level of human in the loop should organizations be aiming for?
Okay, hello also again. I would say I would start with a slight provocative question for a finance audience. So we need to think that are we really automating, have automated our accounts payable function, or we have simply become more efficient, I would say, at manual work. Meaning that when we connect to CFOs, and this is visible through our discussions and the service that EY does the last year. So we see that the expectations are a lower cost per transactions, more touchless processing, better control and quality, and more real-time insight, not just faster processing. So when we look at the reality in the accounts payable, there is a clear gap in our perception between expectations and executions. If we ask, I would say most companies, most finance leaders, they would say that they are very well already advanced in automation. There are some OCR in place, there are some workflows running, there is some ERP or their systems, I would say, are integrated. But if we map all these processes to this maturity pyramid that we see on the screen, we see that automation exists, but autonomy, it does not. If we look at the foundations of this pyramid, manual work, I would say, is existent in all cases. Invoices come from different channels, exceptions are resolved via emails, and while teams, I would say, are reconciling things in spreadsheets. So despite all the investment, the process is still carried by people. And I would say from the CFO perspective, there is limited scalability, and the performance depends only on human capacity. So if we look at the next layer, where there is some automation with RPAs, for example, OCRs, some workflows. Most organizations, again, we say we are automated, and yes, data is extracted, tasks are executed with the workflows implementation, steps are again performed faster. But there is a key limitation that these technologies automate the tasks, but not the outcomes. So they cannot understand the full business context. They cannot resolve, I would say, complex exceptions, or they cannot make decisions end to end. So if something breaks in this process, everything I would say falls back to the humans. So we have efficiencies that are slowing down, and inconsistencies again remain. In the next layer, we see some organization having I would say, integrated workflows among different systems, the ERPs, procurement platforms, so the data flows faster and the process feels more seamless. But and this creates, I would say, this end-to-end automation. But again, if we look deeper, humans, I would say, are still validating the process. They're again resolving the exceptions, and humans are still ensuring the continuity of the process. So what we have achieved, so instead of removing the effort, we have simply relocated. And the CFO expectations again are not fully met because this touchless goal is still partial, and true scalability, I think, is still missing. So with the introduction of the agentic AI technologies, we have fundamental changes, I would say, in the model, because the process now it's outcome driven, and there is what we say this autonomous orchestration, meaning that the system understand the context, the system can make decision, and the system can resolve and escalate the exceptions. So the process continues without a human keeping it alive, as we saw in the previous cases. So from a finance perspective, no touch, I would say, is not just most invoices are automated. It means that the process scales without, I would say, proportional increases in costs, in risks, or headcounts. And that simply happens because, as I said before, the system can handle all the process end to end. So, as a final comment, I would say that the gap that we are discussing now today is not just an automation gap. I would say is a value realization gap between what the CFOs and the finance leaders expect from digital investments and what traditional automation actually delivers. Because we see that organizations have invested in tools, have improved efficiency, have digitized process, but they have not yet, I would say, achieved this autonomy that we are describing today.
Yes, definitely. And I think that comment you made on decoupling FTEs with scaling is really important, because that is a very tricky job to do within GBS. We all know there's a talent shortage, there's a lot of churn, there's a lot of not seasonal work, but cyclical work is the word I'm looking for. So being able to scale quickly with AI agents and have them, especially when it comes to accounts payable, is really important. And I know there's obviously different levels of human in the loop when it comes to different phases of agentic AI. I'd love you to talk us through this a little bit and how you see the role of humans in this agentic AI future.
Mhm.
So maybe if that's okay, I will start. Yes. Good news. The role of human employees is changing from a doer to a manager. So basically a promotion. In, let's say, 5 years, we expect that 90% of all operations in GBS that is currently are done manually will be done by AI. And then the question arises, okay, but what is the role of human then in this new changing world? And the role is to govern and control AI. But how to do it? Like how exactly it is done? And so when we have a digital transformation project, an AI finance transformation, in the first step during the project, we expect human employees to write the instruction, to explain the processes to AI, as well as they would do for every newbie they will get in their team. So to actually guide them through how the process is done currently, and also to review every action that AI is doing during the project, to build the confidence that the decision and the reasoning of AI is correct based on the information you've given them. And then when we go to production, like when the project is over, then the role of human is changing from human in the loop to human on the loop, meaning that you kind of get a promotion, and from a doer, you are becoming a manager of a team, but your team is now not human co-workers, but digital employees. And your role in this new team is to lead by giving the guidance, by giving the rules and methodology, by checking and validating the most complex and difficult cases that require your attention. Pretty much the same as you would be doing with your real team. And then obviously the most difficult task is to trust AI, but we will talk a bit later about that. Over to you, Sally.
Yeah, great. Thank you so much. So we've talked a little bit about kind of the human in the loop. Let's talk about the reality of AI in action. So I'm going to kind of look at the future now of Agentic AP. So if I switch over to my next slide, where can it go? Well, I suppose it's not where can it go because it's already there. But yeah, talk us a little bit through this. I know I'm going to go to you first, Vasilius, because auditability and explainability are incredibly important for all agentic projects, but I know particularly for accounts payable and finance, there's always a little bit of a worry about AI being a black box. But talk us through kind of how you see that in this context.
Yes, I would say, first of all, there is, I would say, what we say, this regulation pressure with frameworks like the European Union AI Act and evolving, I would say, global audit standards. Every automated decision, especially in finance, is now classified as high risk. And with that comes a clear requirement, I would say, for full transparency and traceability. So this means that it's not longer acceptable what we said in the past. The system made the decision. You must be able to explain what data was used, what logic was applied, and why a specific outcome was reached. So, in other words, AI decision to it's not only the regulation pressure, it's also the business-driven pressure. In our discussions we have with CFOs, with finance executives, one question comes always: can I trust this system to make the decisions on my behalf? Because in finance we cannot delegate the accountability, we cannot take the risk, and all decisions must be always, defensible. So if AI delivers efficiency, it will not scale unless it is fully explained and fully controllable. And this is evident in all the surveys and the talks that we have with finance executives across the world. There is strong emphasis on governance and transparency, and we need trusted automation, not blind automation. So the good thing is that with the development of LLMs and agentic AIs, we see that systems can provide this real-time and human-readable explanation. So the decisions can be broken down step by step, and audit trails can be generated automatically. So for the first time, we don't have to choose between automation and control. I think we can achieve both at the same time. Back to you.
Yeah, absolutely. I think it's a little bit of a misconception that it used to be more clear when people were doing it, because I don't know what's going on in other people's heads and often they forget. So yeah, that makes a lot of sense. And Anastasia, how does it work in Hypertus when it comes to the auditability and the clarity?
Yes. So when we talk about AI agent for, let's say, invoice processing or any other document processing, we actually mean the whole team of different agents that work together within one process to actually deliver the result. And how does agents work? First of all, they use different sources of information, but the sources of information are not random as in ChatGPT, but they are exactly based on the information you provided. So basically, it's workbooks and manuals, the instruction based on the particular company processes, as well as the historical data. So how did you do that before? How you processed these documents before? And by that, you can always be sure that the system, the LLMs that are working with your documents have the right context to make the correct decisions. So this is number one. Number two is that within this team of different agents, we have the agent that is called validation agent. And this agent has only one job, to actually prove that other agent did a good job. This agent proves one by one every decision that has been made. It uses another LLM model, meaning that it basically looks with another pair of eyes on the same process and same decisions to ensure this four eyes principle. So the system has this validation loop inside already. And like the third, and Vasilios already touched this a bit about the traceability. So it's always difficult to trust AI, and that's what I've hearing a lot from people with whom I'm talking about that. And for me, so in 3 months, your human coworker will probably not be able to remember why a certain invoice was allocated to a particular GL account. But your digital coworker, AI agent, always will. It will give you not only the information what decision has been made, but also the reasoning why exactly this decision has been made. And this is crucial not only for the internal procedures, but also like for external audits that may come a year after. And then after 1 year, when these external auditors come, you have the full picture, the full information, 100% traceable on every decision that the agent has made, which gives you the perfect opportunity to review it and to actually build the trust to AI. And honestly, I do have some trust issues to even trust my human coworkers sometimes. But like with AI, at least I have the full visibility why the decisions has been made. And if gradually I review these decisions during this human in the loop phase and understand that, yes, I would decide the same way, this builds my inner trust in the decision-making abilities of the AI.
Yeah, that makes a lot of sense. And as I said, we typically know that GBS can have very high churn. Shared services can have very high churn in their employees. So this can really help that lost knowledge leaving the organization, having it in an immutable audit trail and agentified. So talk to us a little bit about, you've already touched on Anastasia, but I'd love to know a little bit more about how AI agents work in invoice processing. Can you talk us through this?
Yes. So let's have the end-to-end process and review it. So on the left-hand side, you see the unprocessed invoices, be it PDF, Word, Excel file. It doesn't really matter for the system what type of file this is. as well as the language doesn't make any difference. It could be any language, European one, Arabic, Hebrew. The system can read everything. And then this unprocessed document comes to the system by an email or API or even by manual upload. And then the magic of AI invoice processing starts. That's what you see in the middle. So how does it work? AI agent team uses the databases, RAG, and the prompt instructions that we have given to them. And it uses the LLM models to actually process the documents by following certain steps. So what do we do with invoices? First of all, the document will be classified. Is it invoice or not? Is it something else? Maybe a Christmas card your vendor sent to you. So this is an easy task. Another quite easy task is the information extraction, OCR. It's no-brainer currently for anyone, I must be honest with you. So all the information will be extracted. What happens next is already a bit more challenging one, is the master data matching. So the invoice information that we have read from the invoice will be compared to what you have in your master data, in your ERP. And then the system will check whether the vendor exists, whether you have the correct bank account number, whether the payment terms are aligned. And if everything is okay, then the document can be set to the next stage if there are discrepancies. For example, you have a different bank account, so you don't know where to pay. Then, of course, the system will flag this as an issue, and you would have to review it. On the next stage, the system will perform purchase order matching and or goods receipt matching to actually understand, okay, we got the invoice. Have we ordered these goods? And the system can perform only also partial invoice matching or match multiple purchase orders to one invoice, so that you always know what exactly have you ordered and how is matched to what you received and what you need to pay for. The next step is account coding. It's where the system, using the instructions as well as the previous data from your previous invoices, will predict what GL code and cost center and maybe approver this invoice should get. This is already quite a challenging and difficult task for a lot of systems, but this allows to process documents much faster, because normally in the standard tools you would do it manually, and that's a very time-consuming task as well. And finally, tax validation and compliance, the most challenging one, because we would validate not only whether invoice has all the information about the tax rates, but also whether the position in the invoice actually matches the tax rates in the invoice, or they should be higher or lower according to the laws within a particular country. And finally, we will do the legal compliance check to understand whether the invoice has all the necessary information to be processed and being fully compliant. And when this all is done, the fully processed document comes to be posted to your ERP system, for example, SAP, or to the workflow tool, depending where you would want it to have. And then what is finally important to say here is that this whole magic of invoice processing, like everything that happens in the middle of the slide, it happens actually on the backstage, meaning that your employees, your teams, will continue working in the tools where they already work, like be it SAP, the workflow tool, what have you. So for them, it's not the process change in a way. The difference is that they will receive the fully processed document for them to be processed and reviewed if needed, in comparison to the necessity of manually input all the information from the invoice to the SAP.
Brilliant. Thank you so much. That makes a lot of sense. So moving on to the next part, I wanted to delve a little bit into the reality. So into a little bit of a use case. Could you share a little bit more on this story? I know that it was a Hypertus and EY project, but Anastasia, maybe you could start.
Yes. So this is a big company in retail and fashion. I personally wear their clothes all the time. So they have around 800,000 invoices per year across 78 countries. So that's pretty much a lot. And the challenge was the low level of automation. As you probably see on the graph, low level means 62. And you probably ask, like, is it low? And I would say it's not that bad. But if you are talking about 150,000 employees in the GBS, then you probably understand that every percentage point of your automation actually counts and makes a lot of sense. And what we were able to do together with EY for this particular client, we were able to do within the project to reach the automation of 81%. And like now, it's been 1 year after the project went live. We now have over 90% of automation with this client. And what is important to mention, maybe 2 facts here about like the real life story implementation, is how we did it. So we started with a pilot with 5 really different countries and really big volumes. And then we did the waved approach, meaning region by region. And in 4 waves, we were able to transform all 78 countries. And the whole rollout took only 9 months, which, if you have ever had transformation project, it's really fast, because usually you don't count a transformation project for less than a year. We were able to do it in 9 months. And maybe final topic to that, final comment to that, is a small pie chart about the error codes. And the question, like, how exactly were we able to increase the automation even more, is by the master data cleanup. Because if you see on this pie chart, a lot of errors or a lot of mismatches came from the fact that the master data of the client had some duplicates, had some issues, had some errors. And the way we do it, we not only flag the issues, but we also like summarize them in the BI dashboard with the full clarity and a lot of reports on how exactly you can then process all these errors and eliminate them in your master data. And by then you basically reach 2 goals. Your master data is clean, and you have higher rates of automation because the system can process documents automatically in more cases when the master data is clean. So that's how we did it.
Brilliant. Thank you so much. And Vasilius, I'd just like to ask you a little bit about how EY get involved, because of course you just can't pick up the technology and put it in an organization in order to make it work correctly. Could you give us a little bit of insight into that?
Yes, EY in I would say in such projects works with the client to understand I would say the current situation, the maturity of the client, realize the current issues, discuss the aspirations, discuss the strategy, meaning this phased approach, how we are going to do it, what is the best pilot to do, perform all the business analysis, build a target operating model as we say, and then hand in hand with Ipatos, proceed with the implementation part, and of course hand in hand with the client, test the pilots and gradually support the rollout to the different entities and to add the additional use cases depending on the case of the client.
Brilliant, thank you. So we've got a kind of 5-10 minutes left of the webinar before we go to Q&A. So just to say to the audience, don't forget to put your questions in the chat or in the Q&A on the right-hand side. I forgot to say this earlier, but I know that the writing on the slides is really small. So don't worry, we can send you a copy if you would like. Just let us know in the chat if you'd like a copy of those slides. So moving on to the next part, we ran a webinar with SSON a few months ago, Shared Service and Outsourcing Network. And one of the questions we asked the audience is, what do you see as the biggest barrier to implementing agentic AI in your global business services? And these were the answers from around 150 different GBS professionals. The biggest one there, data quality, access or governance constraints. And then we see integration challenges with existing systems. Nearly 50% of people put that. Concerns about risk compliance or control, insufficient tech skills or talent, and lack of clear business use cases. So we thought we'd tackle a few of these at the end of the webinar, just to help you with kind of bridging that gap when you are putting in place your agentic AP plan. So Vasilius is going to give us a little bit of insight into these. Some of these barriers are real, some of these are a little bit of a myth and a perception. But yeah, why don't you take us through the first two, Vasilius?
Yes, I would say, first of all, what we discuss with the clients, it's a common area of analysis is the quality of the data. We know that in most organizations, there are quality issues with the data. There is not clear governance. And this makes, the finance team hesitant to promote, different types of investments. But as we saw before with the use case that Anastasia presented, the master, despite the fact that there were issues in the master data, the client did not wait for a separate project to clean the data, be sure that everything is neat, is governed correctly, and then to proceed to the project. So I think this is a myth. So the data quality, I think, is a continuous process, and to control and correct all the issues. And with agentic AI, what brings in the table is the fact that, as I said, it's a continuous process, and with different different agents, like the magic agents, we can identify the discrepancies even from the pilot phases, and gradually implement the right strategies within the organizations to resolve the issues, and then gradually, of course, go to higher levels of automations. So the agents bring real value here. So it's something that, of course, we need to take into consideration, but it's not a barrier that should make us wait before making any decision to invest. Another area where we usually have issues and a lot of talks with our clients, they don't know from where to start. they think that they believe that there are areas, for example, that they could potentially develop AI agents, but they don't have a clear, I could say, business case in their mind, and they feel a little bit mixed on what process to follow. So in this part, our answer is to focus on high volume, repetitive, and high impact process, like, for example, the invoice processing we saw before, because this will deliver a fastest return of investment, and I would say the immediate stakeholder buy-in. So focus on these areas, and I think this will gradually roll out to other processes where needs also there is need to implement AI agents. Another area I would say that also is I would say comes also the discussion is the integration part. We don't need, of course, to invest in new ERPs. We don't need to buy new technologies. This agentic is a layer, AI is a layer that stands on the top of our systems, and with the latest advancements of the technology with APIs and with also with modular implementations, we can do fast implementations without the need to change our technology, but build on our technology. And if something goes wrong, of course, we can reverse the process. So we are protected on that sense. And also the good thing with agentic AI is the fact that the process and the technology evolves based on the exceptions, on the user feedback, and it's not something static. So it's a continuous process, and it's not something that's based on a specific project. So the risk of the deployment is lower compared to traditional system implementations. And the last part is cost related. I mean, is the cost of inaction. I would say it, in many organizations, there are issues, there are hidden costs, and there are inefficiencies. For example, there's a lot of manual invoice processing. For example, there is duplicate effort due to lack of integration between systems. So there is lack of standardization across different entities. Perhaps there are other issues with duplicate or erroneous payments, late payments, or invoices mismatches. So these are costs that we have on a daily basis, and it's the cost of inaction, as I say. And the last part is, I would say, the scalability constraints, because these manual processes cannot handle the increased invoice volumes without increasing the headcounts. And with these bottlenecks that come from increasing volumes, we have issues in our daily daily work, in our daily task, a lack of real-time visibility. So I think it's something that we need also to take into consideration when we do not act.
Yeah,
Sally?
absolutely. It's a call to action for sure. Thank you so much. So we've reached the end of our presentation, and I'd like to take some time for Q&A to go through. Let me just put up our poll as well. We have a second poll there if you do want to learn more about EY or about Hypatus, about Agentic AP, you can answer that poll and we'll make sure to schedule a call. So let's go straight into our Q&A. So first up, Paul is asking, and it's a question for you, Anastasia. He says, hi, Anastasia. Success story example, lots of countries worldwide in just 8 months is impressive. Can you indicate which and the number of interfaces had to be covered in the full implementation, and the type of invoices, PO and non-PO invoices? So yeah, please expand.
Yes, thank you, Paul, for the question. So, first of all, we have this client case as a paper, and I'm happy also to send it over to you and to anyone else after the webinar as a full description of what we've done. Answering to your question, so we've done only invoice processing, so only invoices with this client. They had both PO and non-PO. I don't remember for now the total percentages, how the shares have been separated, but what I know about this case is two facts: that before us, they did all non-PO absolutely manually. So that was the main reason why we were able to make the percentage of automatization that high. And also from the cost perspective, we were able to decrease the number of needed FTEs by 40%. So that probably is another sign of how efficient the solution was for them.
Brilliant. Thanks so much, Anastasia. And Pal, who is different to Paul, has asked.
Yes.
You already saw it on the cost level. He's asking, the agentic use case is compelling. Can you share details on the impact per invoice cost level? And how do you foresee the impact of expected rise in token costs? I know that
Yes.
typically, especially in the pre-built agents, work on an outcome-based pricing model as opposed to how many tokens are consumed. I don't know if you're able to expand on that, or we could send Pal some more information.
Yeah, of course. So the token consumption is the biggest concern and the biggest argument in the topic of build vs buy. Basically, should I build something or should I just buy something on the market? Because when you build, it's difficult to foresee how many tokens your operations will take. What Hypatos does, we charge you per document, meaning that it doesn't really matter for you how many tokens your document have consumed. You will not be charged for these tokens, and that's really good. And to be honest, the token consumption is really difficult problem, and at Hypatos we have a separate team that is only testing different models to understand which tasks could be better done in terms of the output and token consumption. So that's really a challenging one, but that's why we are experts in the process, because we know how exactly that should be done to make sure that your price per invoice is fixed. And the cost per invoice, and here probably I would start, and Vasilios, if you have something to add, would be great. What we face a lot is that a lot of clients don't know their current cost per invoice, because in order to calculate that, you actually need to review the whole process and do this business case, and that's usually where we collaborate with our partners, the implementation partners, who come and actually are able to trace the whole process to understand the current cost per invoice. But in our case, the cost per invoice will be exactly the cost per document that you will get in your contract, meaning that if you know where you stand now, it will be super easy for you to understand the business value, and our general return on investment for most of our project is less than 1 year. So most of our partners say your project will start bringing you money before the financial year will end for you.
Brilliant. Anything you'd like to add, Vasilios, on that question?
Yes, I know. It's what exactly Anastasia said. I think it needs a very good analysis to understand the benefits and to understand where you stand now in terms of costs and what value should a process like this would bring. So it's something that we see very often with the clients. We try to understand the value and calculate the actual return on investment, and we are not just adding FTE's cost. I mean, it's more than that, and it's more complicated than adding FTE's cost. It's a trap that many customers, many companies do when they invest generally in technology solutions. So it needs a more broader understanding of the value of that the solution would bring to your organization.
Makes sense. Brilliant. Well, sadly, that's all we've got time for. I promised you around 50 minutes and we've hit it on the nose. So I want to say thank you so much to Anastasia and to Vasilius for taking time to speak to us today and share their expertise and their experience in AP automation. If you have asked for the slides, I will email you a copy of the slides, but anyway, you will all receive a copy of the recording. Probably tomorrow, I think the email goes out. Please do add us on LinkedIn. And then if you do have any further questions or want to connect, then you can do so, and we will look forward to that. So thanks so much again, and thank you to everyone that attended. I will see you next time.
Thank you.
Thank you.